Weekly Wealth Update, a Make Better Wealth Decisions podcast dedicated to explaining how current events impact your portfolio and the wealth decisions you make. My message last week was that this too shall pass when discussing what might or might not actually transpire in the Canada-US trade negotiations. Well, we now have our answer. What could have been a good deal or a not so good deal in the end ended up being no deal at all because of the deal's terms and conditions being entirely unacceptable to Canada. So what we have now is a situation where we already had an inflationary environment as a result of what's going on with the war in Iran. And that environment is being exacerbated by tariffs being levied against Canada and may yet be further exacerbated by tariffs that Canada will be offering in retaliation as of September 8th if things don't change between now and then. The bottom line for investors, as I said a week ago, is that this too shall pass. You should not be changing your portfolio as a result of trade wars. However, you should be giving some consideration to how your world may change. The tariffs will affect people differently. Some people will be losing their jobs. A lot of people will be seeing their incomes severely reduced. And a lot of other people will see not a lot of change, but maybe a few things in the grocery store being a little more expensive. A few consumer items and electronics and things being more expensive as well. So it'll hit differently depending on where you live and what you do for a living. The thing that you need to remember is that this is the sort of thing that because this is a trade war with the mercurial president south of the border, it is not likely to be forever. Now, some people will lose their jobs and those jobs will not come back. So for them, maybe it sort of kind of is forever. But for most people, this is a situation that is likely to last about 27 or 28 months until Trump's term in office is over. And then hopefully things will become different. And by different, I mean a little more normal. In the meantime, we all need to come to terms with the fact that we are going to be going through a very, very difficult 2 and a bit years, and that there will be a lot of inflationary pressure on our portfolio and on our cost of living. A lot of things are going to become a lot more expensive. Might mean that from a personal finance perspective, you might need to tighten your belt, hold off on certain discretionary purchases, prioritize paying down non-deductible debt, and just hunkering down and getting through what will be a rough patch for most people. It will affect different people differently, but once again, this too shall pass. It now looks as though we're going to be going into a very difficult, challenging time that didn't have to happen, but it's going to happen. You can't wish it away. All I can counsel you to do is to stick to the knitting, pay your debts as quickly as you can, avoid all discretionary purchases, and resolve to get through this, and that this too will end in due course. If you're worried about the current investment climate and your money, go to my website to book a call for personalized advice to assist you in feeling secure and protected about your retirement.